What's going on, everyone? My name's Obi and welcome back to the Courtside Financial Podcast, the podcast where we talk about business and technology. In today's episode, we're going to talk about something that's a little concerning to me as a NIO bull. We're talking about something that could potentially unwind to be one of the biggest pivots in the EV industry since Tesla went mainstream. The question on the table that some people are asking, not necessarily saying this is me, but are we witnessing an end of the pure electric vehicle mission? And more importantly, what does this mean for our portfolios? Picture this, you're driving past a gas station and what you see is something that looks like an XPeng G6. You know, that sleek SUV that's supposed to represent the future of pure electric driving. But wait, why is it pulling up to a gas pump? Well, that's exactly what automotive spy photographers caught last week. A heavily camouflaged XPeng G6 was spotted refueling, not charging, refueling at a gas station. And folks, this isn't just some random sighting. This is a big shift in what could reshape the entire EV landscape. Let's break this down. XPeng, the company that has built its reputation on pure electric vehicles, is now pivoting hard into range extended vehicles. And they're not just dipping their toes into the water, they're diving head first. November 2024, XPeng reveals their Kunpeng super electric system at a tech event. The specs, a combined range of up to 1,400 kilometers, that's nearly 870 miles, with a pure electric range of 430 kilometers. So to put that into perspective, that's longer than driving from San Francisco to Seattle without stopping. March 18th, 2025, during their earnings call, XPeng management drops the bombshell that they plan to offer both powertrain options for the majority of their upcoming models, not just a few models, not just in an experiment, the majority of their lineup. March 25th, 2025. Local media reports that XPeng has planned at least 5 range extended models, including sedans, SUVs, the P7 sedan and the G6 SUV, their flagship models. They're both gonna get range extended variants. Now here's where it gets really interesting. Their first range extended vehicle, codenamed the G01, is expected to launch later this year. The G6 range extended version, that's coming in 2026 at the earliest. But here's the kicker, XPeng is positioning this as expanding their addressable market through range extended vehicles, hyper competitive range extended vehicles. That's corporate speak for we realize pure electric isn't enough to win. Now, as someone who's been bullish on NIO for years, I have to ask myself and ask you guys the uncomfortable question. If XPeng is abandoning the pure electric mission, what does this mean for companies like NIO who have doubled down on battery swapping technology and pure electric vehicles? This isn't just XPeng, this is a fundamental shift about how EV companies are thinking about the future. And if you're invested in this space, whether you're a NIO bull, myself, or spread across the sector, you need to understand what's driving this change. The Chinese EV market is the world's largest EV market and is becoming increasingly competitive. When a company like XPeng, which has built its entire brand around pure electric, decides to suddenly hedge its bets with hybrid technology, that tells us something pretty stark about consumer demand and market reality. Anyways, there's another player in this story that could change everything. Recent reports suggest that Xiaomi's Li Jun and BYD's Wang Shanfu were spotted together at Xiaomi's automobile factory. And this isn't just a casual meeting, this could be the formation of a partnership that reshapes an entire supply chain. Here's why this matters. Xiaomi's YU7, as we discussed on this channel, has a wait list of 58 months. Let me repeat that, 58 months. That's nearly 5 years. Now, companies like NIO have been capitalizing on this by offering Xiaomi YU7 customers refunds on their deposits if they purchase a NIO, Envo, or Firefly vehicle. They're really just trying to capitalize on customers who don't want to wait or are tired of waiting. It's a brilliant customer acquisition strategy. But here's the plot twist. BYD has massive production capacity. Their first quarter of 2025 net profit was $9.155 billion. rent. That's 100.38% year-over-year increase, and they've got manufacturing muscle that Xiaomi definitely needs, desperately needs. If BYD helps Xiaomi solve their production bottleneck, that strategy of poaching Xiaomi customers, that strategy or that window might close pretty fast. Let's get into the technical weeds for a second, because this is where the real story lives. BYD already supplies blade batteries for Xiaomi's YU7 and SU7 models. They're not just talking about cooperation, they're already deeply integrated. And BYD has what we call the world's largest vertically integrated automotive supply chain. Their cash flow in Q1 2025 reached over almost 92 billion ren, and they just raised $5.6 billion through H-shares placement for overseas expansion. Meanwhile, Xiaomi brings something that BYD desperately needs: smart ecosystem integration. The SU7's cockpit experience has been described as redefining human interaction. Here's where it gets really interesting. They're planning to jointly develop solid-state batteries for the SU7 Ultra. If they can crack that code together, they could leapfrog the entire industry. Now let's address the elephant in the room. As a NIO investor, I have to ask, is NIO's battery swapping, battery as a service, pure electric strategy starting to look pretty isolated? Here's what I think. NIO's battery swapping technology is still revolutionary. It solves the charging time problem in a way that hybrids just can't match. But the market is clearly telling us that range anxiety is still a big pain point for consumers. NIO's approach has always been about the total user experience, not just the car, but the entire ecosystem. Their battery swap stations, their user community, their service model, that's still valuable, even in a world where some competitors are hedging their bets with hybrid technology. I'd be lying if I said I wasn't concerned about this broader trend though. When XPeng, a company that built its reputation on pure electric innovation, starts developing tanks for their vehicles, that's a signal that the market dynamics are shifting. So what does this all mean? Here's my take. I think that the pure electric players need to prove that their technologies are worth the trade-off. Their technological advantages are worth the trade-off. For NIO, that means that demonstrating that battery swap is for sure a superior experience. And I think that we all need to watch the partnerships, the Xiaomi BYD partnership, the potential partnership, I should say. This shows us that the future might not be about individual companies competing, but more so collaboration might be the route to success. So I'm still bullish on NIO long term. I believe in the company, I believe in the vision, I believe in the team. But this XPeng pivot is a wake-up call that pure electric might not be as inevitable as we thought. The question isn't whether electric vehicles will win. They will win. The question is whether pure electric vehicles will dominate, or is the future, the not so distant future, hybrid? And right now, at this very moment in time, the market's betting on optionality. For investors, this means staying agile, staying informed, and not getting too attached to any single technological approach. The EV revolution's happening, but it might look a little bit different than we all expected. That's a wrap on today's episode of Courtside Financial. I appreciate you guys for hanging out with me. Happy Friday. If you found this episode informative, valuable, insightful, at the very least entertaining, hit the like button, hit the subscribe button, click the notification bell icon, and we'll see you next week on the Courtside Financial Podcast. This is Obi signing off. Goodbye.